Greetings students. Today we are going to learn about one of China's leading oil company, China National Offshore Oil Corporation. Let us know this company in a much better way. China National Offshore Oil Corporation or CNOOC Group is a major national oil company in China. It is the third largest national oil company in the People's Republic of China after CNPC, parent of PetroChina, and China Petrochemical Corporation, parent of Sinopec. The CNOOC Group focuses on the exploration, and development of crude oil and natural gas in offshore China. The company is owned by the government of the People's Republic of China, and the State-Owned Assets Supervision and Administration Commission of the State Council (SASAC) assumes shareholder rights and obligations on the government's behalf. One subsidiary, CNOOC Limited, is listed on the Hong Kong Exchange. The other, China Oilfield Services, is listed on the Hong Kong and New York exchanges.
CNOOC Limited, China's largest producer of offshore oil and gas, is one of the largest independent oil and gas exploration and production companies in the world. Since its listing, CNOOC Limited, based at the coastal region in China, has attained steady growth through continuous exploration on development potentials around the globe. Currently, the group now has 4 major production areas offshore China. The group also has certain upstream assets in countries such as Indonesia and Australia. As at the year end of 2007, the group owned net proven reserves of approximately 2.6 billion barrels of oil equivalent, BOE, and its average daily net production was 470,000 BOE. The group recorded a profit of 31.3 billion RMB for the year. When compared to the figures before its listings, there has been an increase of 46%, 80%, and 293% respectively for the above figures. Innovation drives the continuous growth of CNOOC Limited. We especially focus on technological innovation, managerial innovation, and operational innovation. The successful resumption of production of Liuhua 11-1 oil field demonstrates the excellence of CNOOC Limited's innovative technology. The company managed to resume the production of Liuhua 11-1 oil field in 2007 after it was shut down for more than a year. Having obtained 2 State Technological Progress Awards for its 2 technology achievements in 2007, the group also explored advanced technologies applicable to offshore extra-heavy oil fields and super-small oil fields. As well, CNOOC Limited actively develops eco-technologies to save energy and reduce emissions. One example is the recycling facility for the liquefied petroleum gas in Wencheng oil field. CNOOC Limited, a young company in the industry, learns from the industry leaders and integrates their valuable experience into its management. The group also builds a business model consisting of its own strengths and characters. The outstanding management practices brought CNOOC Limited many Best Management Awards from leading magazines. The management also obtained numerous awards such as China Business Leader and the Best Executive Awards. For the group's operations, CNOOC Limited is driven by its core value and actively adopts innovative projects. To realize its expansion target, the company explores deep water regions and seeks development potentials in overseas energy markets.
When the State Council implemented the regulation of the People's Petroleum Resources Incorporation with Foreign Enterprises on January 13, 1982, CNOOC was incorporated and authorized to assume overall responsibility for the exploitation of oil and gas resources of offshore China in cooperation with foreign partners, which ensured a monopoly status for CNOOC in offshore oil and natural gas. With its headquarters in Beijing, CNOOC registered with capital of RMB 50 billion and has more than 98,750 employees. In June 2005, a CNOOC group company NYSE and Hong Kong listed public company CNOOC Limited made an $18.5 billion cash offer for American oil company Unocal Corporation, topping an earlier bid by Chevron Texaco. Unocal's oil interests in Central Asia were considered a strategic fit for the company. On July 20, 2005, Unocal announced that it had accepted a buyout offer from Chevron Texaco for $17.1 billion, which was submitted to Unocal stockholders on August 10. On August 2, CNOOC Limited announced that it had withdrawn its bid, citing political tensions in the United States. The company was advised by Goldman Sachs. CNOOC Limited had a reputation for acting independently of the Chinese government, had not notified government officials before bidding for Unocal. The political backlash in the United States caused by the Chinese government to increase its oversight of Chinese companies to avoid future risks to Sino-American relations. NOOC Limited faces challenges in the domestic market. Its rivals CNPC and Sinopec have been permitted to conduct offshore exploration once monopolized by CNOOC Limited. In accordance with the commitment by the Chinese government to join the World Trade Organization, the oil marketing will be open to non-Chinese companies such as ExxonMobil and BP by the end of 2006. CNOOC Limited's smaller domestic competitors have been trying to break the monopoly of the three major NOCs in the industry, adding 61% to Nexon's July 20, 2012 stock price. On July 23rd, CNOOC agreed to buy Nexon for $15.1 billion, China's largest foreign deal. The Canadian government's Investment Canada Act was used to determine if the sale was a net benefit to Canada. In addition to Canadian authorities, the acquisition had to be approved by the Committee on Foreign Investment in the United States. On 7 December, the sale was approved by the Canadian government, and on February 12, 2013, it was approved by US regulators. CNOOC operates in 6 business sectors: exploration and development of oil and gas, technical services, logistic, chemical and fertilizer production, natural gas and power generation, and financial services and insurance. In 2004, the company generated revenue of RMB 17.92 billion, a net profit of RMB 24.22 billion and RMB 12.09 billion in taxes, up 32%, 62% and 80% respectively from the previous year. By the end of 2004, total and net assets had reached RMB 153.26 billion and 83.6 billion, a 28 and 21% increase from the beginning of the year. The company is 5th and 12th in gross profits and total assets of state-owned enterprises in China. Standard & Poor's and Moody's Investors Service assigned CNOOC a long-term BBB plus and A2, equivalent to China's government rating and the highest rating for a Chinese company. The exploration and production of oil and gas grew steadily in 2004. Output reached 36.48 million tons of oil equivalent, increasing 3.12 million tons, 9% over 2003. Domestic production was 24.72 million tons, an 11% increase from the previous year and higher than the average national growth rate of 3%. The annual output in Bohai Bay exceeded 10 million tons of oil equivalent for the first time, making it the second offshore area producing over 10 million tons after the eastern South Sea and an energy production base in North China. Under ex-CEO Wai Liucheng, who was promoted to the governor of Hainan province in October 2003, and Chairman and Chief Executive Fu Chengwei, CNOOC undertook a number of mergers and acquisitions. It acquired 5 blocks in Indonesia from Spanish oil company Repsol in 2002, becoming its largest offshore operator. In 2003, it brought 5.3% of the NWS ensuring supplies for the Guangdong LNG project. That year, it also acquired 12.5% of Tangguh to ensure supply to the Fujian LNG project. CNOOC tried to acquire 12.5% of Australia's Gorgon field to ensure supply to the Shanghai and Jiang LNG projects, but the parties could not agree on price. According to SASAC, in December 2008, CNOOC made a light oil and gas discovery in the 100 million ton class at its Jingsua 25-1 field in Bohai Bay. In May 2009, the company announced plans for a $4.38 billion coal-based natural gas project in Shaanxi. CNOOC brought LNG to China with its Dapeng LNG terminal in Guangdong, which received its first shipment from the NWS LNG project in Australia in July 2006. In October 2004, contract sharing was negotiated in Burma by Myanmar Oil and Gas Enterprise, China Huanghui Contracting and Engineering Corporation, and CNOOC's Singaporean joint venture partner Golden Aeron. Golden Aeron is run by Cecilia Ng, wife of Stephen Law. Law is son of Lo Sing Han, known as the godfather of heroin. In 2008, the U.S. Treasury intimated that CNOOC cooperates with a company run by a family known for heroin trafficking. In 2007, CNOOC was involved in a clash with Burmese workers who threw stones at the company offices. 10 workers from Kyaung Phu were detained and questioned by authorities after a dispute with CNOOC over low wages, long hours, reported underpayment, and the mistreatment of inhabitants. In 2008, CNOOC was accused of abuses of human rights in Burma. Arakan Oil Watch stated in a report that his company left behind such a trail of abuses and environmental contamination on Ramri Island that outraged locals attacked their facilities. CNOOC's action in Burma has been compared to that of communist officials in rural China, where entrepreneurs desiring a development opposed by local residents steamroll their opposition. The Shui gas project in particular has been linked with land confiscation and human rights abuses. So students, we got to know about the various aspects of China National Offshore Oil Corporation. We went through the company's history to its present market scenario. Hope the information about the company was useful. Have a good day.